We are here with John Carter. He's the president of Simpler Trading. John, how are you doing today?
Great, Spencer. Good to be on the show. Should
Thank,
be an interesting day.
thank you very much for coming on. I want to just jump right in here. We're talking about Facebook a little earlier. Do you have any thoughts on Facebook?
Facebook at this time, there's a couple of stocks that I call honey badger stocks, meaning they're going to do whatever they want regardless of the market. And I would put Facebook in that category. It's just one of those stocks that no matter what else is going on in the world, it just seems to benefit Facebook. So it's one of those where I hate to blindly, I call it BTFD, buy the freaking dip on a stock, because I'm always wary of when it's going to roll over. But for the time being on Facebook, I'm completely fine buying pullbacks to the 21-day moving average on a daily chart, selling put options, anything that's bullish on that stock until that stops working. I find the simpler I try to make it like that, the better.
Okay, I want to get your quick thoughts on Apple. I'm looking at their chart right now, hovering around the 119 level. Do you have anything going on there?
Apple, to me at this point, this is a stock, obviously, it's a great trading stock. It, to me, is, for lack of a better word, is just tired. But it is consolidating on a weekly and a monthly chart. And when I see a stock that's just consolidating, meaning just trading in a narrow range for months and months at a time, it is kind of building up energy. And at this point, I kind of look at, there's some trades and some stocks that I look at as like, wow, this thing is setting up for a big move, and I want to get positioned. And there's some other ones that I just call day trading stocks, like, all right, this thing's just going to bounce around between its average true range for a while, and that's what I would consider Apple now. Right now, it's a trading stock. I'm not looking for this to have a big move either way.
Okay. Continuing along the FANG line here, let's talk about Netflix real fast. I see they're trading a little bit up in the pre-market.
Yeah, Netflix is on crack. This is a great from a trading perspective, and it's great because if you look at the fundamentals, it's so easy to start throwing this thing under the bus. What I like about this is that there's so many funds out there that don't believe the story, that they're short the stock, and that creates great movements to the upside. I think Netflix is going to explode to the upside, destroy shorts. This is a stock I love being long.
Are you short any stocks right now?
There isn't. Anytime I try to short something, it just doesn't seem to work very well. There's just not enough interesting issues. Some of the computer security stocks like PANW, that was one that kind of fell from grace. It's starting to bounce back a little bit. To me, that's one that I want to start taking some short positions on. To me, at this point, the cleanest shorts are actually more in the currencies. So what I've been doing is buying puts on FXE, which is the exchange-traded fund that represents the euro. And the cleanest downtrends I'm seeing are in other asset classes, not necessarily stocks. And it's been hard. I love shorting stocks. I love making bets to the downside. And it's just been hard finding consistent setups like that amongst stocks.
I tell you, I'm looking at JP Morgan Chase right now, and I want to know what you see on this chart.
So JP Morgan Chase, this is one that I talk about with what I call monthly expiration, where I look for stocks that have what I call extraordinarily high open interest on the day of monthly expiration. So today's monthly expiration, and if we look at the 67.5, the 67.50 strike price, this thing has an insane amount of open interest. I think it's like the last time I checked, and I can check here real quick, it was something like 56,000 contracts on the call side, 10,000 on the put side, and the strike prices above and below it have about nothing. The odds that JP Morgan will essentially pin or trade around 67.50 today is extraordinarily high. And so for the last 2 days, we've just been selling straddles, selling the calls, selling the puts on the 67.5 strike, with the idea that both of them we'll be able to buy both of them back for a nickel as that stock just pins there. And it's one of my favorite monthly expiration plays. It's just the market at this point is just going to suck the premium out of everything that it can. It's going to screw people who are trying to catch direction, and you can take advantage of that by selling these straddles. It's one of my favorite things to do on expiration day.
And what is your risk on that when you're selling that straddle?
So that's a great question. There's two ways to do this. Now, if you're selling it, I sell them mostly naked, but I'm also, of course, doing size appropriate for that. The risk of that, it can be huge. There was what was the bio stock the other day that was up like 600%?
K-Bio.
Oh yeah. So some guy was short in his whole account, and then his account went negative, right? Well, if you sell a naked straddle, and you do it with too big a size, say I sell a naked straddle in J.P. Morgan, and the next day Goldman Sachs announced they're buying it for $20 a share higher, I'm gonna get hurt. So if I'm selling a straddle, I'm going to do it with small size. If I'm going to do bigger size, what I'm going to do is what's just called an iron fly, meaning I'll sell the straddle, I'll sell the 67.5 put, I'll sell the 67.5 call, but then I'll go maybe 2 strikes above and buy some protection. Buy the 70 calls to the upside, buy the 65 puts to the downside. And what's nice is when you do that into monthly expiration, the premium on those is actually very small. So on something like that, the best thing to do is just it's a combination of experience level, position size, and just how much risk people are willing to take. On a JP Morgan, I'm fine selling a naked straddle, but if I'm doing this on Tesla, I'm doing it as an iron fly to protect myself from the unknown.
So on a stock like K-Bio, when a penny stock like that kind of breaks out, what do you do, if anything at all?
I laugh. I don't do anything.
Okay.
I don't touch that crap.
Right.
It's just I used to look what I called the stock of the day, and it's interesting. There's opportunities, but my main thing in trading is looking for consistency. For something like that, to me, it's more of a comedy of errors. It's more entertainment. There are consistent setups out there that I know are reliable that can make money, and that's not one of them.
If I want to get into trading options, how would I go about learning how to do that? You guys have a lot of good resources on the site. Can you kind of elaborate on that?
Yeah, the best thing, at our site, simpleroptions.com, a lot of times when people find us, they've been doing it for a while. We kind of ramp up into that intermediate and advanced kind of trading very quickly. We have been getting more and more people just asking like, hey, these options sound great. Where do I learn? So we have put together some beginning courses. I do have a book that talks a little bit about it. And the great thing is there's a lot of free information on the internet. Just search, what's an option. But the main thing is that, once you learn how options work, the thing from there, the key piece is just understanding what strategy to do when. And that's what comes from experience, and that's what we try to help people with.
We're on the line with John Carter. He's the president of Simpler Trading, joining us on Benzinga's pre-market prep. You mentioned the monthly expirations, and we got another week till that. Weekly options, is that something that you're active in?
So for weekly options, I'm a big fan of weekly options, especially on some of the higher beta stocks. The big stocks that we all like to look at, the Amazons, Google, Netflix, Tesla. A lot of times, my idea with a weekly option, if you're going to buy it, is that for the most part, you've got to have a short duration because obviously you're going to get killed in premium decay. That's ideal to me for a day trade. You buy calls on Tesla in the morning, sell them in the afternoon, or maybe for an overnight trade. From there, though, what's great because of that rapid premium decay is there's a lot of really nice opportunities to sell options. I love selling weekly options on big stocks like Priceline. The premium on those is fairly jacked up, and you can get a real nice kind of a healthy premium on those. But weekly options to me that was the greatest invention ever made for traders. Primarily, I switched a lot of my focus to just options once those came out.
My bad. It is the monthly expiration today.
It is the monthly expiration, yes.
All right, so could you just walk us through here? I know you talked a little bit about with Spencer. Talk about, you mentioned J.P. Morgan. Go maybe with like the spiders and, maybe talk like a possible pin here, how you look at it, how you come up with your analysis on the pin through the open interest.
So on the spiders, one of the things that comes up a lot is I will look at the SPX options because the SPX options they're more kind of the bigger options that hedge funds are using to kind of hedge their risk and everything. And then, of course, that'll tie into the SPYs. And on something like this for a monthly expiration, and for SPX, you have to go look at SPX PM, which is monthlies. I will tend to see, what I've found is that a lot of times the S&P 500 tends to kind of pin close to what I call quarter numbers. So 2100, 2075. I would look today that by the end of today, we're going to be very close to either 2075, probably most likely, or 2100. So that would put the spiders at the corresponding levels there. So for the spiders, the nice round number that's setting up today that has high open interest is 210. That coordinates with 2100 on SPX, but the 210 strike has 161,000 options on open interest on the call side, 45,000 on the put side. And then for the 2075 level, there's just not as much open interest. So just from an open interest perspective, I wouldn't be surprised to see the spiders pin today at 210. And in fact, as I'm looking at this, I'll be looking at selling some puts this morning on that. If the spiders can rise to 210, then those puts would expire worthless, and that works for me.
Okay, and then, I mean, and just to explain the dynamics, I mean, is it just the gravitation toward the open interest, people, the 210 calls trying to get them in the money, the people that are short are trying to keep them out of the money, or are they just trying to zap all the retail that bought it at, the 210 calls and puts?
It's a little bit of both. One of the things I found that's really driving a lot of this, though, is that there are a lot of large funds out there that are trying to continue to find ways to make their monthly 1.5% so they can get their fees from the clients. And one of the ways to do that in a sideways market is to sell tons of premium. And they're doing it on the SPX. They're doing it on the S&P 500 options, both with real options that we can see, but also synthetically. And there is a vested interest in having the S&P 500 close, especially on the monthly expiration, in a range that's most going to benefit them. I think it's really helpful as a retail trader is just when you're looking at the stock market, today especially, just realize that there is going to be zero rhyme or reason as to what the market is doing. Nothing on the news is going to tell you. All you got to know is that the market is going to close in a way that benefits the funds that have sold this premium the best. And by looking at it that way, then you just kind of go with the flow and not try to make sense of what's going on.
Yeah, exactly. And there's a lot of different things going on. I mean, you talked about the strategies. I know you're a lot on the selling end of options. I do some selling against, some positions. What I kind of like to do, and just try and not do anything on Monday, Tuesday, Wednesday, even Thursday, maybe late Thursday, if I can find some things that are, maybe like a dime or 12 cents or something like that, very limited risk, get them into the money. You could get, some, if you do some decent size, you could get some pretty good moves off those. Some of those, options move very well, and you can get a bang for your buck with also a little bit of limited risk here. John, out of the chat here, what do you look for volatility measures / indicators?
There's a couple of different things. I mean, one of the things is, of course, is just the implied volatility of the stock itself and the range of where that is over the last 52 weeks. But I also like to look at the overall, the markets and the VIX. And anytime that the VIX gets really, really quiet for a certain amount of time, for example, just coming into last Friday, the VIX was very, very quiet for, 6 weeks. It wasn't really doing much. And when it gets really quiet like that, it's almost like it just needs to release energy. And we did see on Thursday and Friday just kind of this release of energy. The VIX shot up. The stock market came down. So I like to look for those periods of time when the VIX gets so quiet that the Bollinger Bands on the daily chart actually compress and start trading sideways. And that's just an indication to me that this VIX is done consolidating and it's time to build up some energy. And so when I see that, I really start to like buying puts on things like the indexes with the idea that if volatility increases, the stock market's going to go down. And that's one of my favorite things to keep an eye on.
Let's take some look at some individual issues here. Let's talk about the big dog here, Apple. Nice run this week, added to the conviction buy list at Goldman Sachs. Nice run here. Where are you looking for a pin on Apple?
So Apple's an interesting one. I've been looking at this, and yesterday or on Wednesday, I was looking at either it was going to be 115 or 120. Initially, I started making bets around the 115 level. Now I'm looking at it this morning, looking at it at 120. My plan here is literally in 14 minutes, I'm going to be selling the 120 puts on Apple that expire today with the idea, and right now they're $1.31 by
Wow.
$1.42, with the idea that Apple is going to be able to rally up to 120 and just essentially, take out all the value there. One of the things
Wow.
that's always an interesting exercise on something like that is that if you knew Apple was going to go to 120, and of course we don't know anything 100%, what would be the best way to do it? And most of the time in this case, it's not buying calls. In this case, it would be selling that at the money put, because that way you're collecting a little bit of premium, capturing all the intrinsic value, and doing it that way. But that's what I'm going to be doing in 14 minutes.
Okay, a little bit of timing there, and then of course, if you do get it off for $1.50, then you have a cushion all the way down to 118.50. You're still in the money, right?
Exactly. That's the beauty of it. Is that the interesting thing about selling options is a lot of times people will freak out about selling options when, in many instances, if you're looking for a small move, okay, let's just say a small move higher, selling an in the money put actually is a much better odds play, especially for a day trade where you can watch it, than buying an in the money call. By selling the in the money put, yes, you're limiting your upside, but if you've got a specific target, then it's actually a much better way to do it.
Yeah, especially, I mean, you could just watch the premium just erode because you could do it like something like Apple. You could sell it, to put at a certain price, and then the stock even, goes down a little bit, but it's over the course of 2 hours, and you're in the money because they're just zapping, like every minute they're zapping that time decay out of it. John, before we let you go, just a quick look at Baidu. Broke out over 200 yesterday. Nice run here. Doubled since the flash crash here. Any thoughts on Baidu?
Baidu is a stock. It's funny you bring that up because I hadn't looked at it in a while, and just this past week, obviously, it's been catching my attention. And what I like about this, and I know we were talking about the little biotech stock blow up yesterday, whereas, okay, yeah, that's a big move. Do you get on it? Well, that kind of stock, I'm not interested. Baidu has actually had almost a similar run, but here you've got a big stock, you've got liquidity, and you've got a short squeeze going on, and I like this. I mean, today, as I was looking at it just from an open interest perspective, there wasn't really attractive in terms of open interest, like, okay, it's going to pin here. But this is one I'm going to be looking at today where just kind of taking a shot of like, all right, could this thing, it's at 209, does it have an opportunity to pin, say, at 210 or somewhere around there? The interesting thing with Apple is that it had super high open interest. Baidu doesn't. So I look at Baidu right now from a trading perspective. Where are we right now? If we can, I'm actually going to put an order in today. If we can fall back to $206 today, I'm going to take a long position into next week. Probably buying some in the money calls. Next week is Thanksgiving, typically a light volume, up week, and Baidu right now is poised to continue going higher just with that short squeeze that's going on. And I like Baidu. I think that's going to be a fun one.
Oh, good, man. John, tell us the orders that you're putting in. What more could we ask for? John Carter, president of Simpler Trading, making it simple for us. Thanks a lot, John. We'll talk to you again soon.
Yep. Thanks, guys. Always fun.